Hemant Kanawala of Kotak Life Insurance is now joining us. Hemant, considering that rates in the system come down the way they are predicted to, do you think that insurance, mutual fund will be the biggest beneficiary of it? Because investing into equities via insurance or mutual fund should actually lead to superior returns than about 4%.
Hi, good morning to all the viewers. Certainly, if you observe, the way savings used to be channeled in our country, a large part used to be go into physical savings. And so, if financial savings were around 7% of the GDP, physical savings used to be around 11 to 12% of the GDP from the household side savings. Now, and broadly, you can assume that physical savings is not one of the most productive way of doing the saving. In physical, you have gold and real estate. Gold obviously does not earn you any return except the capital gains which you make over the course of the holding it, which by and large should be in line with the inflation. Whereas real estate, again, you can get some release income, but I don't believe people used to really invest for that. So what will happen is that financial savings will get a greater traction in the overall pie. It is not only about mutual fund and insurance, they will benefit, but even bank deposits will grow, which is already happening. So what will happen is that overall financial savings will do well, depending on the attractiveness of the product to the consumer. Each will have this own growth path. So obviously, challenge will be on the each of them will be that they offer superior returns to the investor. And whichever gives that feature will tend to benefit more over the time.
Right. And what do you think this will do to PEs of the Indian market? Do you think PEs of Indian market would expand, or it's already at a high level, so one would wait for the earnings and then probably take that call after 6-12 months?
See, PEs are a function of broadly two factors. One is what are the cost of capital, because that goes into the denominator of the equation, and what are the growth you expect in the economy in the longer term. Well, short term is not so relevant because you are investing business for longer term. Now, both the factors for the time being are acting in favor, because if more money gets channeled into financial savings, then interest rates will tend to remain low in the system. It also helps the inflation, because what used to happen is in last few years that when savings were channeled in more into say real estate, then that is gradually used to slip into the inflation, and so inflation in the country used to remain high. So both these factors will favor lower cost of capital. The numerator is the growth part, and that obviously we are all positive in the medium term, but we need to see how that trajectory pans out. So standalone does not really change the P equation, but if the cost of capital comes down on a sustainable basis, which is what we need to observe how it figures out over the time, then value a P of the markets can move up by maybe around 5 to 10%. So if you believe that 14 to 15 was the average P market you should trade in the past, maybe there can be some upside to it if cost of capital comes down structurally, which will be able to assure only as time goes by. Today it is difficult to make that prediction.
Right. In terms of the overall demonetization exercise, there is also a windfall gain which is expected for RBI, because a lot of notes may not come in for deposits or tendering. What is that number that you're building in? Do you believe if that's a substantially high number or a lower number, it will change the way this exercise is done?
So everyone is trying to guesstimate that what kind of shortfall or currency may not come back. First thing is that we have no idea about it. How much will not come back to the system, because that will be a wrong assumption to start with. If as per the official numbers, 8.5 lakh crores is already come into the system. So in a way, gap is not very wide. So the first thing is we don't know how much will not come back into the system. Second thing which is also not clear is that if say as of 31st December we get a certain number, can RBI really give it to the government for fiscal usage? Because there is no regulatory legislative clarity on that part also. So it will be premature to start building that in. 1st February is where the government announces the budget. It is better to wait for that day, because government will try to build in that number into their estimates and see what kind of usage it is. See, finally, if that money is used, if at all there is some surplus on that count, for any investment-led activity, it will be good in the longer term. But if it is distributed in terms of either subsidies or for consumption, then it may not materially be good for the economy in the medium term. But we need to see what kind of surplus comes and what kind of usage government puts that to. So both are variables at this point of time. So our advice is that for that to pan out, play out, we should wait for the budget to be declared on 1st February, and what kind of guidance government gives on that, we need to see.
Right. Do you think budget will be one of the big events to watch out for this time? With these exercises done, with changes happening on the global side, crude being where it is, you think budget will be a big event to watch out for, and you expect a lot of announcements?
Certainly, this time budget is very, very crucial. You also remember that government plans to introduce GST from next year. So that itself will mean that the way tax treatment is done, government will have to present it in a different way, and we'll also have to get used to it, because till last year you will have numbers of excise, customs, and various tax collections. Now you will have one number GST, which will be there. So how does government account for it will be crucial. Second thing is that by and large, investors believe that there will be some near-term impact of demonetization on the economy. So it has become now very crucial that government announces some measure to counter that slowdown in the economy, and what kind of measures they announce will be critical. So from that point of view, budget will be an important event to determine what economic growth we can expect over the next 2 years. This also remains that if you have 2019 elections in mind, then this will be the second last budget practically for the government. 18 will be the last one where they can make give a good strong impetus to the economy. So overall, I think the budget will be important, and we believe that government will use this as a good opportunity to give strong impetus to the economy.
Right. In terms of with the exercise that we are seeing on demonetization, with what's happening into US in terms of the new precedent, you think a lot of sector rotation changes would happen? So till now, consumer, pharma, everything that was going down was attracting buying once you had volume growth returning. You think that will change? It will become much more selective. Some new sectors may emerge which may actually just see buying on every decline?
See, there are times tactical changes made to the portfolio when there is uncertainty in the near term. So those kind of changes will be made because by and large market was underweight IT. Now there is a relative currency, although relatively rupee has done well, but since dollar is strengthening against most of the currencies globally, even rupee is depreciated against the dollar, which will help the IT sector. But we don't believe that it is changing any of the structural issues with both IT and pharma industry. So it is too early to say. The prices have corrected, but to assume that IT sector will start growing at a much faster rate going forward, it is too early to make that statement. Also, Mr. Trump was very critical about outsourcing of the jobs. So Indian IT companies, as far as they are doing the job onshore, then I don't believe he has any issues. But he has issues against jobs being given out of America. So which is where many of the companies used to make more margins. So their margins may remain under pressure directionally. So there will be some tactical changes which might be required from a near-term perspective. But if you believe in the India growth story and believe that whatever the reforms government is announcing in the last 2 years will have a positive spin for the economy, then eventually domestic companies will do well, and any sharp correction in them will be a good opportunity to buy. Just because there are uncertainty, maybe investors can spread out their investment over the next 2-3 months. But overall, we don't believe that themes of private sector banks, cement, or discretionary consumption changes. Particularly if the interest rates are coming down, it makes even a stronger case for them.
Right. Suppose you say that you like the structural story in terms of consumer. In what's happening. So in the last 7 years, there has been a very big PE expansion, not for probably names like HUL, ITC, or some of the large ones, traditional FMCG names, but names like Voltas, names like Havells, names like TTK Prestige. They've seen a significant expansion in their PE. The PEs now are 30, 32. You think markets would start to give that discount? They may not go back to the levels of 8, 9, 10 where they were trading earlier. But do you believe that that discount would happen till the time sustainable growth returns again?
That can happen because there are two uncertainties. One is obviously P's had expanded materially, as you mentioned, and also now investors are not sure what kind of earnings they will report in FY17 and whether the effect of this will be felt even in FY18. Now only time will be able to tell that whether demand recovers in FY18 or not. But we believe that demand will recover sooner than later. Because if some of these items like ACs, as you mentioned, if people want to consume them, if there is a summer, they will end up buying them eventually. If for that they have to use either digital currency or check system, they will use that because finally that is for the comfort of the family. So some of the consumptions they may be able to differ, which may be deferred, but some of the items beyond a point people will like to postpone because they are of comfort to the family. And their demand can come back, sooner. But it is too early to make that statement, and at least we should wait for end of December to see what kind of currency comes back into the banking system and how the consumption revives. So overall, directionally we remain buyers of them, but as you mentioned, there are a lot of uncertainties. We can spread out our investment over the course of next 2-3 months.
Right. Let's talk about telecom as a pack. Now, after this demonetization, there has been an increased interest in the telecom space for two reasons. One is that, a lot of telecom users may not be impacted by this. And the second, the success of payment banks, if it actually happens, or mobile payments or payments via apps and mobiles. Do you think that's a big reason to buy into telecom names?
So I think so. What we discussed earlier that there will be some tactical changes being done in the portfolio, and I think telecom will be part of it. We don't believe that this changes anything structurally. We just need to observe one is that whether it directionally changes the competitiveness from RGO, because RGO was likely to go with their commercial launch from 1st of January. Now, because of demonetization, if they intend to defer it, then obviously it will be at the margin positive for the current telecom players. But still, one of the main challenges of telecom was increased competitiveness, and that is not going away. So investors may look at it tactically because it is also one of the under-owned sector, and there can be some outperformance of that sector in the near term. But to make a case that it can give you compounding returns for next 3 to 5 years, maybe it is difficult to envisage today. But if the scenario evolves more favorably for them, we may have to reevaluate them. One really positive factor for them might be the falling of interest rate, because most of the balance sheets are leveraged, and falling interest rates will also at the margin help them. But that is more of balance sheet issue rather than business. The business conditions according to us remains challenging for the time being, and one needs to be somewhat cautious on the sector for them.
And overall, if we just look at the numbers and when the numbers come out, they'll have Reliance Jio impact plus the demonetization impact plus interest rates yet not have come down. So Q3, Q4 will be muted.
I agree. Obviously, no, Q3 will certainly be muted because for most of half of the quarters, activity will be relatively very slow, so it will be impacted. Q4 we need to see. So that is where the role of the government comes in. If they are able to, replenish the currency in the system, because a lot of the slowdown in the demand currently is of transactional in nature. People are not able to transact, so that's why there is a slowdown. But as we find currency back into the system, people will start transacting. So at the lower end, transaction will resume fast because people cannot postpone those demand beyond a point. So that will resume early. For high ticket items, it may take some time, but once investors start doing it, it will also resume. So remember, if you look at headline numbers, of the earnings are also linked to global economy, which is improving at the margin. So you may get some support from them. So metals will get a support from them from the rising better global economy. IT sector at the margin may stop disappointing you. So we'll also get some support from the global economy because 40 to 50% of our earnings are linked to the global side. So that is also we need to remember. So the impact on earnings certainly will be there, but it will not be very sharp. Some of the consumer companies may see a big correction, but that is roughly only 20-25% of the market. But rest may not see. Like banking is not very clear whether what kind of impact they will see. Banking is almost 30% of the market. Now they will benefit from large treasury gains, which will they get because of falling interest rates. Now on the other side, they may have some adverse impact because of CRR, increased CRR. Also on the asset quality side, it is not very clear whether there will be some slippages and they will have to provide for increased credit cost. So banking will remain a big swing factor, and the other part of the market will match itself. So slowdown in earnings may not be material, but we started the year with a 15% assumption in earnings for the year. Maybe it will now go down to mid single digits rather than mid double digits.
A lot of investors, fund managers that we are getting are talking about premium consumer discretionary slowing down. So something like a high-end jewelry store business, something what happens to high-end auto business, maybe bikes or cars, all of it would slow down. And people are worried as to what will happen. But as the other theory says, when people are worried, you should go out and buy into these names if businesses are structurally good. Some of these businesses are structurally very good. They don't need debt. They don't have any balance sheet issues. They are spread across India. If there is any knee-jerk reaction which continues, would you look to buy these names, or you would still say it's early, wait for a couple of results to see the impact, the fear should build into the market and then come out and buy these names?
So to answer second question first is, that's the advice is that since there is uncertainty, you spread out your investment over a span of 3 months. But in many sectors, say if you for example, take a jewelry, the organized sector was very, very small. As said, the unorganized players in the last few years were finding challenges on the balance sheet side. They had borrowed and they were able to service that debt. And at the top of it, now you have this issue on the cash side. So this makes organized players who are already compliant with the regulatory requirements of the nation, then they will tend to benefit. Now, to what extent they benefit, again, we'll have to see with time. But this is being followed by implementation of GST, which itself was going to make organized players more stronger. So what will happen is that anyone who was formal system, as we may call it, or organized players who are following the laws of the land properly, will tend to benefit over the time.
Hemant, we spoke about how you would approach these names which were traditionally great and good businesses to own. How would you approach IT as a pack? They are also great businesses, great disclosures, have been here for more than a decade. People trust them in terms of the numbers, the overall commentary that they give. How would you look at IT in terms of valuation, the approach if the investor really has a long-term view?
See, IT, there are two issues. One is, directionally growth is coming down because the companies have become much larger in size than they were, say, 10 years back. So they have to, they become a dominant player in the overall IT spend. And for them to, they are still capturing market share, but at a relatively lower pace. So multiples need to adjust for it. Second issue has been the capital. These companies have been generating huge amount of free cash flow, but they have been not very strong about distributing it back to the shareholders. So if they start doing it and give a guidance, so what they do is that they will give a one-off dividends in 2-3 years, but every year payout is still really low. Now instead of that, if they start declaring higher payouts every year, then there will be a reason for them to re-rate, because then investors will start treating them more like a more steady business. To give a approximate, will be like a consumer company that which generate huge amount of free cash flow, good ROCs, and fair amount of dividend coming back to the investors. But as of now, what is happening is that since they retain large amount of free cash flow with them, their ROEs are coming down every year. So base business ROC is remaining healthy, but ROE is coming down because the cash on the balance sheet does not earn much return. Particularly if you look at now, interest rates have come down in the Indian economy. Their ability to generate any good return on it will be still limited. So that is how one needs to see that. One is growth are coming down for them. So they will not be able to grow at 20% maybe ever in life. So if you look at any 3 to 5 period, I think so if they achieve low double-digit growth, it will be considered to be a good achievement for the industry. And second is they will have to be somewhat more prudent about their capital allocation strategies.
Say this would be the correct scenario to look at the IT pack. Dollar index is expected to go up, interest rates are expected to come down. IT is definitely one business which has cash involvement of as low as it can have. Do you think it will be the correct time for them to increase dividends, and which in turn would make them look attractive with the rates in the system coming down?
That's what I mentioned. Obviously, see, the IT sector had underperformed broader market for the last 6 months or even in 12 months period. Valuations had corrected, so things were looking, from a value perspective, good for them. Even from ownership perspective, many funds were underweight IT sector, so makes sense that they will invest into the sector in the near term, and so sector can outperform the market over the course of next maybe 3 to 6 months till the issue in the economy gets resolved. But when we are talking about investment with a 3 to 5 year perspective, there is not enough clarity whether the growth will come back. As we discussed, maybe one event can be higher dividend payouts, which can help the re-rate this company for the same amount of earnings growth. So if companies start giving guidance on that, maybe there will be a re-rating happening in this sector. So tactically makes sense because they will have a tailwind from weaker rupee. Maybe there is also a belief that overall corporate spending in USA will come back once their uncertainty on the presidential election is out. So whatever be the outcome, people will start spending now. Till there is a uncertainty of who is the next president. People tend to be somewhat slow in spending. So maybe the spending will resume. This is what we had observed in 2013. Maybe it will happen when in the next quarter. For that, obviously, we will have to wait for the corporate announcement when they announce the result.
Okay, again, there is an issue with that link. Hemant, thank you so much for taking out time for us. But he was pointing out that when the IT spend starts to pick up, that will be the time when these stocks would also start to look even attractive than what they are.